Good afternoon, everybody. We're here today to talk about the Human Services for-profit social service product. My name is Jeff Collins. I'm the Vice President of the Commercial Lines Underwriting Division and the Product Manager of the for-profit product. And with me today is Valerie Matea. She is the for-profit product specialist. So let's get going to the first slide. First slide there we go, is we're going to go through the agenda today. In the agenda, the items we're going to be talking about is the eligibility for the product, a quick description of what we mean by human services and versus social services. We're going to go through the target niche and the non-target exposures. We're going to review the lines of businesses and coverages. Towards the end, we're going to talk a little bit about line of business specific claims. We're going to review the for-profit submission requirements, the overall competition that we're seeing currently in the industry, a description of why we think it's important to sell Philadelphia insurance, and lastly go over some key website links and so forth for the applications, et cetera. First, the eligibility, and this will go through a couple different slides here. So again, this is a human services product or social service, so we can be synonymous with how we explain and describe human service versus social services. And we're going to basically discuss the exposures that currently have these human service and social service exposures. And finally, we're going to review the favorable track record and loss experience associated with the product. So what is it that we mean when we classify a risk as human services or social services? And what is the difference between the two? Well, first of all, these are organizations that address and provide a variety of services to individuals with special needs. They serve people with need, and they serve vulnerable populations, both of which have the goal of promoting the welfare of others. So many people ask, what is the difference between social services and human services, and are they the same? Well, technically, the way we define human services is that it's an umbrella for the social services, as well as the mental health and physical health accounts, residential services, and treatment services. So human services, think of that as the umbrella for social services. Included within social services includes clients with physical and mental disabilities and the elderly or disadvantaged. So one thing, too, about the human services versus social services is that a social service worker works directly with clients, whereas a human services professional focuses more on the broader work of the community. So from a social services standpoint, as we define for-profit, working with a client could be working with either developmentally disabled clients, and those are clients whose disabilities manifest over time. So it will be a mental or physical impairment that begins anytime during a developmental age. Examples would be autism, cerebral palsy, et cetera. And intellectually disabled is a synonym as well, where it is a disability that's present at birth. So it's limited in functioning, intellectual functioning, and adaptive behaviors at birth. So that would be a quick overview of the differences between human services and social services. So in the for-profit product for social services, our niche product is essentially exactly the same as our nonprofit human services products. So as we look at this from a for-profit versus nonprofit, it's identical. There's a few variations, and the first one is a variation. So the adult daycare product is predominantly a for-profit product a lot of the times, and the difference between the for-profit and the nonprofit is that for the for-profit product, we are not accepting any new business with an automobile exposure. That's predominantly due to the inherent auto exposure that we're seeing with our for-profit business. We do accept adult daycare business for a nonprofit business that has auto exposure. So other than that, the target niches are identical to our nonprofit. And just going through some of them are the advocacy groups, Association of Retired Citizens, Drug and Alcohol, Goodwill Industries and Group Homes, transitional housing, residential housing, homeless shelters, and thrift shops, to name a few. And if you want to include YMCAs and YWCAs, are typically nonprofit, but if there are any for-profit, they would all fit the acceptable niche target for the for-profit product. As I stated, it's any for-profit human services class that's included in our nonprofit niche. That's a target acceptable niche. Residential adult daycare facilities less than 20 beds is our target. As stated before, we are excluding any risks that include automobile coverage. And other typical niches that we see in the for-profit product that are predominant, inherent to the industry, are residential drug and alcohol programs, children's homes, elder care homes, which oftentimes have synonymous names. Could be enriched housing, could be adult foster care homes, but generally they're all elder care type facilities. And finally, sleep centers. That's one of our probably newest business classes that we've added to the for-profit product. Unacceptable target niches. These are niches that we typically exclude from coverage due to either inherent loss history, exposures being outside the box, or extraordinarily severe hazards that we see in the industry. So first and foremost are nursing homes, assisted living, and hospitals. Low-income housing, we do offer that under our affordable housing program and have a separate product for that. Similarly, camp operators, again, we have a similar product specific to camp operators, so we don't include them in the for-profit product. And we don't typically like to see adoption or foster care where the revenue represents greater than 25% of the total operations. There are occurrences and instances where we do look at that, but it's a one-off acceptance and a referral to home office. Home health care, hospice accounts. Again, we have a separate product specific to that, so they should be referred to the home health care product. And we obviously don't like the sex offenders, sex abusers, or residential counseling associated with sex offenders for this product. Public paratransit accounts, for-profit paratransit accounts are one that we typically don't like to see, and the reason for that is because of the wheelchair securement claims, the frequency and severity associated with that risk with those business classes. That ties hand in hand with the accounts where we see auto premium representing greater than 75% of the overall total premium. This is a monoline auto account. We do have a business auto product code that we would ask that you go and refer those monoline auto accounts to them. And lastly, construction where it's primary operations, and animal shelters, humane societies, et cetera, due to the dog bite claims. Again, some additional exposures, unacceptable exposures we avoid are the adult daycare risks with any auto liability. That's standard for new business. We do have some auto intensive adult daycare renewals that are currently on the books, and we are looking at increasing our auto liability rate significantly due to the exposure there. Foster care greater than 25%. Medical clinics and hospitals, any accounts with poor loss history, horseback riding, et cetera. So again, you can see that it's very intensive on transportation, paratransit, auto. Those are the classes and exposures that we're looking to exclude.
Okay. Okay, so I'm going to dive into our available coverage options. We do offer a commercial package that has many lines of business. Begin with our property. We have large in-house capacity with very experienced underwriters to help you out. We have triggers for either occurrence or claims made for GL, PL, and abuse. We do offer separate limits of liability for abuse and molestation as well as professional, so they are not capped in your GL limit. We also offer primary and vicarious medical professional liability for employed, contracted, or volunteer physicians and dentists, which is something that is definitely beneficial when you have these large entities with many operations. We also have auto liability coverage and a large in-house capacity for umbrella, sometimes even offering up to $20 million. So first, we're going to go over the property line. We are an ISO-based property carrier. We use their class codes and rates. We also are offering flood and earthquake if desired. We have separate inland marine coverages for computer, any kind of miscellaneous property, etc. And we can offer blankets and agreed amounts upon request. The few conditions that we would have along with that is a signed statement of values that verifies that we're carrying 100% of the values. And we also would request that a signed facility business income worksheet is completed. We do have 3 different business income worksheets that we would need completed depending upon the type of business that you have. So based on the revenues, if you're less than $5 million, we would probably recommend the short form, greater than $5 million long form, and if it's a thrift store or a sheltered workshop, we have a separate worksheet that is designed specifically for that type of exposure. Next, we have our human service professional liability. We will pay sums that the insured becomes legally obligated to pay as damages arising out of a professional incident. So there are 2 different types of coverage forms or coverage triggers. We have the HS003, which is our occurrence form, as well as our 004, which is our claims made coverage form. These are separate limits from the GL line, which is beneficial as when claims occur. And we also have defense costs outside of the limits. We also provide vicarious liability for contracted services. So for those individuals that you may be, the insured may be hiring to work on behalf of them, they would have coverage under this line of business. Additionally, we have coverage for physicians and dentists. This is something that you can choose either primary coverage or vicarious. It is available because we are covering the entity, and the services provided by the employed or volunteer physicians or dentists have their own separate medical malpractice primary coverages in place. We can provide that vicarious coverage for the work that they do on behalf of the insured. We also can provide primary coverage for employed, contracted, or volunteer physicians, or even dentists, while acting in the scope of their duties for the named insured. The Human Service PL coverage form does provide vicarious coverage to the entity for subcontracted physicians or dentists and employed psychiatrists carrying $1 million of individual primary coverage. That's something that is definitely beneficial and should be kept in mind when you're looking to place coverage with. Next, we're going to briefly discuss the abuse and molestation coverage. We will pay those sums that the insured is legally obligated to pay as damages because of bodily injury if the insured is liable for another person's abusive conduct. We do cover allegations of employee abuse, allegations of improper supervision of clients, as well as defense coverage added. So this is something that you'll see a lot of the times are relevant and happen, unfortunately, and this is a coverage that is definitely beneficial for your insured. We do have two separate coverage forms. We have the PISO 008, which is our occurrence form, as well as the PISO 007, which is our claims-made version. I'm going to briefly go over our submission requirements and process for account handling. We have a Human Services supplemental application. It's the same as your nonprofit Human Services supplemental application. We do request that usually on a yearly basis. A court application, a hard copy, currently valued loss runs. We do ask for 3 prior years' losses as well. The website address or brochure is pretty important for us as we like to kind of get a better understanding of the accounts that we're looking at, and having the website address is always helpful. Pictures of the risk, the inside and the outside of the locations and the premises, extremely helpful and also part of our submission requirements. We do like to review the financial business plan and resumes of startup risk. So that is something that we definitely would need up front. We do have a variety of applications. This would be based on the size of the account. We have the long form and the short form. Those differ based on size. We also have the renewal application. That's the one that we would ask be completed each year, just to kind of verify the operation and see if anything has changed. Jeff had mentioned earlier our adult daycare application for those specific products. We do ask that this has a separate application so that we get the relevant information to review the exposures and update them accordingly. We do have a separate sleep center and supplemental application. This is also a requirement in order for us to quote this type of exposure. And lastly, we have the elderly residential supplemental application that would be requested for those types of risks. Next, I'm going to go over our competition. Obviously, this is a list of some of our main competitors. Briefly going to just go over some top ones. We have Hanover, Citizens, West Bend, Selective, and Great American. These are the competitors that we see most frequently. We also have a product evaluator. This is available on our website. It's a great tool to help identify what Tilly has to offer and compare it to competitors. We have a specific one geared towards adult daycare, and we have a secondary one that is for human services products in general. This can be used for nonprofit or for-profit products. So this is a great tool to help evaluate if Tilly is the right fit.
Thanks, Val. Let's talk quickly about some of the industry hot topics. What we're seeing in the industry today from a for-profit and nonprofit standpoint, or generally just the human service industry. So the for-profit sector has been able to adapt well to the current trends of budget cutting and sometimes privatization as well. They've been consolidating well, and they've been holding up better than the nonprofits. The nonprofit organizations are busy fighting over funds, and a lot of the senior management of the nonprofits are spending more time trying to raise money rather than handle the risk and control the exposures. And as a result, the whole industry has become fragmented and hampered by business structures and advocacy, implementation, et cetera. So this is still going on in the industry, and we deal with it every day in terms of how we handle claims and how we see claims develop. So the for-profit industry is more flexible to invest and reduce some cost of services, which is good, while the nonprofit industry has to be more focused on their core mission statement. And what I see happening in the near future is probably some more consolidation in the nonprofit industry, because some of the nonprofits right now are underfunded and are probably either going to fade away or become bought out by some of the more substantial nonprofits. So what does kind of all this mean? You see a lot of employee layoffs in the social service arena. There's significant turnover, oftentimes resulting in lack of servicing. And because of the lack of servicing, we see exposure increases and losses. Oftentimes you see these social service organizations seek different ways of developing funding, and they'll begin services that they may or may not be adept in terms of organizing. So they create services that they're not well educated on, and it creates a lot of losses. So for instance, an organization such as a YMCA may decide to get into the foster care arena. They don't have any experience in the foster care arena. Why would they get into the foster care arena? They get in there because they see a way of capturing funds. So this is what we continuously see in the social service programs, whether for-profit or nonprofit. And we need to be cognizant of that as agents and as risk managers and as insurance agents to figure out whether or not this is a severe exposure. So because of all this, the nonprofits and the for-profits are seeking price reductions. So pricing is a significant factor on the policy renewals, and oftentimes the insurance companies need to think outside the box to come up with some alternatives to make the risk relevant and palpable in terms of writing. This may or may not be increased or decreased coverages, higher or lower limits, et cetera. Sometimes you get a risk that becomes uninsurable due to exposures, and those are the issues that we want to try and steer away from. So the industry topic here is to work closely with your insurance underwriter and marketing person to make sure that we're appropriately working together to provide our client with the proper coverage and limits. So lastly, you'll see a large increase in policy cancellations due to the lack of funding, as well as policies that are going to get non-renewed due to poor claims history. So they all tie one and all together. So what are the key selling points to the Philly insurance policy? Why sell Philadelphia Insurance? Number one, we're the largest segment leader in the human social service segment. We insure almost $1 billion of social service premium. We consider ourselves a one-stop shopping. We do all lines of business with the exception of workers' comp. We work together with claims, risk management, marketing, underwriting all together, and we dovetail it with partnering with our agents to go out and sell the commercial package policy to our insureds. We've got the ability to offer all coverages under a commercial package with broad coverages and limits available, and we also have separate abuse and professional limits as Val stated from the overall general liability. We've got up to $20 million in-house and can seek higher umbrella limits. Most likely we'd have to go out on the fact market, but we've done so and have the ability to do so. We are very cautious these days on our abuse limits. So I think that's one thing that we all need to be cognizant of, that ever since the Sandusky issue, our abuse claims, the loss development's gone up, the cost to handle the claims have gone up, and the severity of the claims has gone up. So frequency and severity both for abuse claims. So it's just an area that we need to be really cognizant of. We also have the ability to cross-sell with our D&O, EPLI, and cyber liability products. We're continuously coming out with new enhancements. Look for more in the 2018 year. And we feel as though we're the industry leader due to longevity in both claims handling and our innovative risk management, risk control services. We'll go through some of those services at the end. Additional selling points that we feel are critical, as Val indicated before, is our physician coverage. So we do offer vicarious, assuming that the psychiatrists have $1 million of placement for their primary. And that's if they're a contracted physician. We also offer primary coverage for all employed, contracted, and volunteer physicians while doing duties associated with the named insured. those limits for physician coverage go up to $5 million. Lastly, the Property Elite, the Commercial Auto Elite, the General Deluxe endorsement, and the Bell endorsement. These are pretty typical with all of our human services products, and we are currently in the process of reviewing these endorsements and elites and look for changes and enhancements coming in 2018. But if anything is required, a separate endorsement can be added that maybe can increase coverages, et cetera. We're very flexible on how we do these things. But we feel as though we're the premier in the industry, and we often see a lot of our competition trying to match our coverages in these instances. So, as I said, look for improvements in 2018 along these lines. So I think it's important to understand the overall profitability of the for-profit product. So as you go solicit some of your clients and you try and understand why it is we do what we do, you have a better understanding by understanding the loss history. So this screen just shows you the line of business last 5-year historical loss history. And I did bold in here the auto liability as being the line of business where we see significant development. It's currently at a 67% pure and an 85.7% ultimate. So I will say that it's probably going up rather than going down, unfortunately, at this point, despite a lot of efforts by us to try and concentrate on the reduction of frequency and severity on the auto liability line. We have come out with some ISO enhancements that have gotten some rate increases across 8 to 10 of our states. I would suspect that we might see some of that in the near future. But the reason is that we feel the drivers right now, there's a lot of non-road auto exposure. There's distracted driving. There's more distracted driving than there's ever been. And we really don't see it slowing down in the near future. I think you'll see that our competition is doing as bad, if not worse, in this line of business. And you will see rate increases across this line of business for this product as well as our other human services products. So we're doing very well in the property, and we're also doing better and sufficient in the general liability, which also includes our professional liability as well. So we're focused predominantly on the auto. We're a little bit focused on the abuse exposures, and we remain focused on the med mal and professional liability exposures as we see loss development occurring there. Overall, excluding CAT, we're at 50% pure and a 65.8% ultimate. We look to get our ultimates somewhere around 60%. So 60 to 65% is good. We're slightly over that, but the loss experience has been trending positively overall in the last 5 years, negatively slightly in the auto. So as a business class, drilling down within the for-profit product, what are some of the areas that are performing well and what are some of the areas that we need to work on? As we mentioned earlier in the presentation, the adult daycare product for for-profit is performing poorly, predominantly because of the auto, but also because of the general liability and professional liability. As you can see, the 84.6% pure loss ratio is severely poor, and that's an area that we've taken progressive action and now have eliminated any auto at all on any new business, and we're doing a book review for increased auto rates on our renewals. Residential elder care homes, this is kind of an up and down loss ratio, and predominantly I say that because every once in a while we get an abuse claim which is a large abuse claim, and that kind of offsets some of our positive loss development. So the residential elder care homes and the group homes we're keeping an eye on, and then we're doing well in our other business products that you can see, business classes that you can see here. As an overall line of business by frequency, the auto liability, as I said, is our most frequent claim. It represents 40% of our claims. As you can see, the loss history you're seeing here is from January 2009 through August 2017, so it's an 8-year loss history. And as you can see, we have quite a few incurred claims there, $274 million of incurred claims. of which 40% frequency is auto liability. And then general liability represents 13%, property 12%. And as an incurred, the predominant line of business, once again, is auto liability at $109 million versus the general liability at $100 million. So from a general liability standpoint, by frequency, what do we see? And I'm going to go through this quick, but if you look, the first 4 out of the top 8 are associated with slip and falls. As you would expect, a lot of our product is driven by vulnerable populations that are old, and the slip and fall is the inherent frequency loss leader. And as you can see, the first 4 out of 8 are slip and fall loss causes. From an incurred standpoint, the first 4 are the ones that you see. These are the severe claims that we see that are associated with fatalities, alleged negligence, alleged wrongful death, and a lot of these are stemming again from our elder care homes or et cetera, our residential elder care homes. The alleged abuse and molestation claims is the second on the list, and as I said, while not frequent, we do see a significant tick up in severity for the abuse and molestation. So as you would expect from a GL standpoint, the top 4 are the wrongful death, negligent claims, et cetera. Quick claim scenario, from a general liability standpoint, we see all different kinds, slip and falls. This one was a client pushed another client down. It's a client that receives services from our insured. From an abuse standpoint, it could be client on client, it could be employee on client. Generally, it's also associated with some sort of lack of supervision. You're going to see a claim incurred from anywhere from $10,000 to $2 million, or it could go into the umbrella, et cetera, depending on the incident and the number of incidents associated with this employee or client. And then the professional liability claims could be a med mal claim, could be a counseling claim, could be a psychiatrist prescribing wrong medication claim, et cetera. But again, you'll see some of them that reach high 6 figures or 7 figures as well. From an auto standpoint, here's the interesting thing here. As we said, auto is the predominant frequency and severity. In this particular instance, not only is the insured vehicle rear-ending the other vehicle the largest frequency of claim, it's also our largest severity of claim. So driving too closely, that is a driving technique that can be controlled. It can be taught, it can be taught, and it's one of those areas that we try and concentrate on with our risk management department to educate our drivers, educate our insureds and our drivers that following too closely is the #1 frequency and severity of claims. A lot of that, as I said, is driver distraction. So they all go hand in hand, and it's definitely something that we're going to continue to work on, and we ask that the agents preach this to our insureds as well. Claim scenarios for auto, these come in many different facets, but this particular first one is a insured vehicle striking a pedestrian in a crosswalk. I don't know what it is. I think, again, it's a distracted driving issue, but we're seeing multiple vehicles hitting pedestrians, and it's because the insured is either looking at their cell phone, they're not paying attention, they're distracted by the client in the vehicle, or all of the above. But the pedestrian claims for this product and other social service products are becoming inherently more frequent. And I also want to indicate that the other auto claim that we're seeing high severity and frequency on is left-hand turn claims. Left-hand turn, vehicles turning left, not seeing vehicles coming head-on at them, is becoming more and more of a high-frequency, high-severity issue. And not only that, it seems like motorcycles are getting involved in these claims as well. So those are our 2 high-frequency, high-severity claim scenarios for auto that I would like to point out. Lastly, with property, water damage claims seem to be the highest frequency areas. I don't think that's anything crazy. and from a high severity standpoint, it's fires. And those are stemmed from cooking, from smoking, from fires in attic spaces, concealed spaces, stuff like that, electrical fires. But again, it's the high frequency fire, the high severity fires that are leading the top 20 incurred. Again, I just touched upon some of them. The fires are associated with anything from smoking to electrical problems, and the water damage claims are anything from freeze-ups in your sprinkler system, freeze-ups of your domestic water pipes, or damage to the underground piping leading into the house, et cetera. But a lot of water damage claims predominantly from freeze-ups. A quick overview of our risk management services. These can be looked at, and more details can be found on our Philly.com site. Two that I really wanted to point out to you are the two in the very middle. The Abuse Prevention Systems provides our turnkey risk reduction solutions to child abuse and just general sexual abuse training. This is available online through Philly-sponsored seminars. And secondly, the one that we're seeing a little bit more requests for are the ALICE training. The ALICE training provides strategies for surviving an armed intruder event. Unfortunately, this is prevalent in the entire world nowadays, and we provide this training for a lot of our social service and religious organizations nationwide. So please take the time and go into Philly.com and educate yourself a little bit more, but this is a great snapshot on our risk management services. So we pride ourselves on risk management. We pride ourselves on innovative risk management. And we often ask, what are the 10 reasons why, from a risk management reason, to place your client with Philadelphia Insurance? Number one, we do large account service. We'll sit down with the insured and do seminars. We'll do large account service plans for them, and then we'll do stewardship meetings 90 days before renewal. We've got excessive product knowledge. We've got partnerships with industry-leading great service organizations. We have innovative training online, which is available in our website. We do live training, driver training, sexual abuse training. We also have the ability to do a large loss trend analysis by location. So for accounts that are comprehensive, that require a little bit more hand-holding from a risk management standpoint, we can obviously do loss trend analysis by location, by loss cause, by state, by region, et cetera. And lastly, we work closely with our insurers and agents to handle critical recommendations and just make the account overall more profitable, with the intent, hopefully, to minimize losses and ultimately lower premiums. Lastly, available resources, marketing materials. So everything, as you know, probably now is available through Philly.com. We've got our human services brochures available, our highlight sheets available, claim scenarios available, and direct contact to either claims, risk management, or underwriting, product management is also available with phone numbers and email numbers directly on the website. And of course, Val and my information is on the first slide as well. And you know, all the information you need, all your information is available on Philly.com, or you can call your marketing people. So thank you. We hope this provides you with a good overview of the for-profit and social service product, and please contact us with any additional questions.